Good morning. My name is Markus, head coach at Rockwell Trading. It is Thursday, July 29th, and we're going to see what's going on in the markets and what could move the markets this morning, taking a look at things in the next 15 minutes. So, yesterday, big news day. Focus was on the Fed. The Fed had their uh, Fed statement and press conference, and not a whole lot of action. Not a whole lot of action. Let's first take a look at the S&P, and let me go to a 5-minute chart. Let's make sure that we have that up. There we go. So yesterday, yesterday we see that the S&P 500 just kind of choppy here in the morning, dipping a little bit ahead of the Fed statement. A little volatility here when the statement was released, and then a rally into the press conference. Things continued to move higher, and then things pulled back into the close. So a whole lot of nothing yesterday when it was all said and done. The S&P just down not even a point, so essentially flat for the day. The Dow, same type of activity and movement throughout the session, down 0.4%. And the Nasdaq, same movement. We just saw a little bit of a rally early on in the session in the Nasdaq before that pullback into the Fed statement and then that reaction. So a very muted reaction to the Fed, but because there was some really nice earnings in big tech, the Nasdaq got a little more of a boost in trading in the morning. So what did the Fed say? Well, the Fed kept interest rates in a target range near zero, saying that the economy continues to strengthen in spite of the Delta variant concerns. But Powell did stress that the economy is still a ways away from achieving the Fed's dual mandate, which is stable prices and maximum employment. In fact, the employment side is really what he stressed, where there's still a ways to go to get to that point where there's maximum employment. So that's something that they're definitely keeping an eye on. Nothing really on bond tapering. And again, this is something that analysts really expected to be addressed last Fed meeting, but then the focus became on interest rates and a sooner than expected interest rate hike, possibly with the inflation concerns creeping up. So they kind of shied away from bond tapering. He did address the Delta variant and quote, saying what we've seen is with successive waves of COVID over the past year and some months now, there's tended to be less in the way of economic implications from each wave. We will see if that is the case from the Delta variety, but he later said that we've kind of learned to live with it. So it's a valid take on the Delta variant and the potential impact on the markets. And this is something that we've seen with the recent movement in stocks, right? There were concerns back in June when there was a state of emergency in Japan and the Olympic Committee decided to ban spectators. So there was this dip there. Some rising concerns with the Delta variant and, possible closures, concerns with the reopening in some areas and how this was hitting the world. And then on Monday last week, there was this drop, but stocks marched right back, sitting at records, pulling back slightly this week. But, that seems to be the case, that we've kind of learned to live with it. Of course, there could be changes. There could be, countries that are harder hit, but it seems like the Fed and just investors in general, we're not expecting that screeching halt like we had back in 2020, where nobody knew what to do and what was going on. And at this point, uh, even with the Delta variant, things are improving, or we've learned to live with it. We've learned how to handle some of these issues, concerns, and it's pointing more towards business as usual than a big shutdown. So anyway, what does that mean for today? Well, futures are pointing to a higher start. The mini Dow is up 0.4%. The mini S&P is up 0.2%. Nasdaq down slightly, so down a tenth of a percent. Not a big move there, but for the most part, a positive start. Now, we did have some economic news this morning, and it, you could say it was a little disappointing. So, unemployment claims, again, higher than expected. Last week, first time unemployment was at 424,000, which was a shock. The expectation was that it was going to be much lower. And then this week, 400,000, or it's really the previous week, but the report this week, 400,000 Americans filed unemployment for the first time, and this was versus 382,000 estimate. So still a little bit higher on the unemployment claims front. That's not dipping lower, which a lot of people have expected. Advanced GDP actually coming in at 6.5%. So this was an increase at an annual rate of 6.5, which is solid, except the expectation was 8.5%. So GDP coming in a little bit lower, unemployment claims coming in higher, but so far it doesn't seem to be having an impact on the futures markets, as we still point to a higher start there. Let's take a look at a few earnings stocks that reported earnings. Comcast CMCSA. That ticker always kind of throws me off. They could have come up with something better than that. Come on, guys. So Comcast sitting at $59 a share. Is this? Yeah, this is flirting with record highs for Comcast. So up just shy of 2% pre-market. Now Comcast, they had an earnings beat, better than expected revenue, reporting 84 cents a share versus a 67-cent estimate. Company said that the quarter was helped out by a rebound in ad sales as well as the reopening of theme parks. So that seems to have helped earnings, and Comcast sitting at records, flirting with record highs. It looks like maybe 59.11 was their all-time high, and 59.01 as we get closer to the open. We could look at Merck MRK. Merck down a 1% pre-market. They reported earnings that were in line with expectations. They also reported a revenue beat, but down just a little bit pre-market. Facebook, a biggie. Facebook pulling away from records. Yesterday opened at record levels, rallied, and made new record highs, closed with a new record high. But down 3%, a little over 3% pre-market. So Facebook, they reported better than expected earnings, $3.61 a share versus a $3.03 estimate. Better revenue, so solid earnings for Facebook. They also had the fastest sales growth since 2016. So huge positive there. However, they said that growth will slow over the next few quarters. So huge quarter for Facebook, but they expect that to slow, and it looks like there's some profit taking on this one. Traders a little concerned about that statement, and down 3% pre-market. If you look at Yum Brands, Yum Brands up 2.7%, almost 3%. And Yum looking at making records today. So Yum Brands up almost 3% pre-market after an earnings and revenue beat. They reported $1.16 per share versus a 96-cent estimate. The quarter was helped out by reopenings and continued strong online orders. So for those of you who aren't familiar with this stock, this is actually the parent or the owner of KFC, Taco Bell, and Pizza Hut, as well as some others. So Yum getting a little boost pre-market. Looks like it's going to open at new record highs. Ford was a surprising winner here. Ford up over 5%. Now, Ford reported a 13-cent earnings per share, but there was an expected loss of 3 cents per share. Chip shortages have been an issue, and this was why there was the expected loss of 3 cents, which did not happen. But Ford says that they expect the situation to improve, and they also raised their outlook for the year. So Ford up nicely, pre-market up over 5% as we get closer to the open. Now let's look at Qualcomm. QCOM, Qualcomm up 2.9%, looking to take out these highs recently with this pre-market move. Qualcomm reported a $1.92 earnings per share versus a 168 estimate. The chip maker gave an upbeat forecast saying that they expect supply chain issues to get better. So it sounds like supply chain issues have been an ongoing concern, and it has been something that has been addressed by many of these companies reporting earnings. They expect supply chain concerns to improve, and up 2.9% with an earnings beat. Now, iRobot, not so lucky. iRobot, this one just going crazy. I think there was some meme activity on this one, and then since then it's fallen out of favor and hasn't really done much. iRobot, they're down over 11% pre-market after reporting an earnings loss and cutting its outlook for the year. They said that they've been hurt by the worldwide chip shortage and that this will continue to impact its ability to fulfill orders this year. So iRobot down, not getting a whole lot of love pre-market. So it's not there yet. But Hood. Today's a big day for Robinhood. We'll trade under the ticker HOOD, Hood. And Robinhood will IPO this morning. The IPO is at 38. So big day for Robinhood, which started back in 2013. It could be a big day. Now, who knows what's going to happen here? I'm not buying this IPO, and in fact, generally speaking, my view on IPOs has changed. So back in the day, if you got in on an IPO, you were golden. I mean, it was almost guaranteed to rally. But this has absolutely changed. I mean, look at this. Look at this. Didi IPOs. It was supposed to IPO at 14, and on its first day, it traded at 16, rallied, and has been horrible since. We can look at Coinbase, right? Coinbase, big news for this IPO, opening at 380, approximately 381, rallying, and then coming back. I mean, even you're going back to like a Uber, right? Uber, up now, but initially rallied for a couple of days and came right back. And then there's Lyft, same story, IPOs, drops, now still below its IPO levels. So I believe in the 50% pullback with IPOs, where, hey, if you're interested in IPO, wait until it pulls back 50% and then maybe consider it. So I'm not getting in on Robinhood. For some people love the brokerage, some people hate them. It does seem like there are more concerns with Robinhood when I'm working with a trader, and there's some trading related issues with the platform or broker or what could be done or how it works. But I do have to say I commend them for disrupting the whole industry. I mean, they absolutely changed the brokerage industry, and for that I am grateful because their business model forced other brokers to change, and now we're all paying lower commissions for that. So thank you, Robinhood, even though I will not be investing with today's IPO. So that's going to do it for today's stock market update. I hope you have a great trading day. Remember, trade what you see, not what you think. Make some money, and we'll see you back here tomorrow. For those of you in the mastermind group, I'm popping over so we can see what's going on at the open, see if we can find some good trades. So until tomorrow, happy trading, everybody.